global liquidity is often measured in dollars because a lot of the liabilities internationally, as I previously mentioned, are denominated in dollars. And so that dollar component is pretty important. And so you can either get more rapid credit creation to improve global liquidity, or you can get a weaker dollar around the margins, and that can improve global liquidity because you're basically changing the denominator at that point.
With a $418 million investment spread across several funds, including a $238 million stake in BlackRock's iShares Bitcoin Trust, a significant move is underway in the Bitcoin ETF market. This development aligns with the SEC's increasing openness to mainstream Bitcoin exchange-traded funds, signaling a potential bullish momentum for Bitcoin prices. Investment expert Lynn Alden recently discussed Bitcoin's potential as a store of value and the challenges of volatility and regulation during an interview with journalist Paul Barron. Alden also highlighted PayPal's entry into the stablecoin market with PUSD, which has quickly reached a valuation of $500 million. While established players like Tether currently dominate, she emphasized the impact that evolving regulations and the rise of yield-generating stablecoins could have on the market. Despite these complexities, Alden suggests that increasing institutional interest and favorable regulatory shifts might drive Bitcoin's price upward in the near future.
In addition to cross-border capital that has made that point a number of times, I've been in the camp that global liquidity is one of the biggest correlates with Bitcoin price.
Right.
And there's really kind of two components of global liquidity when measured like that. One is the rate of credit formation, and then the other one is the strength of the dollar, because the global liquidity is often measured in dollars because a lot of the liabilities internationally, as I previously mentioned, are denominated in dollars. And so that dollar component is pretty important. And so you can either get more rapid credit creation to improve global liquidity, or you can get a weaker dollar around the margins, and that can improve global liquidity because you're basically changing the denominator at that point. And so I do think that in the years ahead, we'll probably get another positive liquidity cycle. We've been in kind of a stagnation there for a period of time as central banks try to tighten. I think we'll probably get another move upward, and I would expect as a base case for Bitcoin to do pretty well in that environment. Yeah. Historically, Bitcoin and stablecoins have kind of been the two killer apps of crypto, right? They're the two things that have really caught on with traction through bull markets and bear markets alike. Bitcoin is an emerging store of value. Basically, it has superior monetary properties than most other monies we're familiar with. But because it's still small, it's still not widely held. People try to build leverage on it. It goes through these cycles. It's volatile as it reaches its whatever its total addressable market is, or as it gets close to what it eventually will be. Stable coins are just dollars in digital form. It helps serve the need for dollars globally. The demand for them. And there's two main use cases of stablecoins. There's one that's basically the unit of account for trading and DeFi on various crypto platforms. A lot of that's going to be on Ethereum. And then the other big usage of stablecoin is basically demand for dollars in the global south. Much of it satisfied by Tron. So there's almost like two different worlds of the same asset. As a near-term temporary store of value, like working capital, that's where stablecoins are very useful. Basically, the ability to tolerate volatility is somewhat of a privilege. Basically, the more financially comfortable you are, the more you can say, I'm willing to hold something for the next 4 years. Whereas stablecoins, you can kind of think of them as your checking account if you're in one of those environments where dollars are useful.
Or do you think it will centralize into whether it's Tether, USDC, PYUSD, or some of the European stablecoins? What do you think is going to be the future of that market?
So thus far, network effects have been shown to matter. Liquidity kind of begets more liquidity. And so far, Tether's network effect in this has been pretty remarkable, probably stronger than I would have guessed. I've also been watching some of the yield-generating stablecoins, or you can kind of think them as tokenized T-bills, things that try to pass on the yield to the holder rather than the yield being captured by the issuer. And even them, I mean, they've grown, but they're not exactly capturing market share very quickly. And so network effects are clearly pretty strong among stablecoins. And I don't have a firm view on how many there'll be or how much those network effects will entrench, because some of it is like a Boolean outcome of regulations, So some of the onshore ones try to, turn the arm of the state against the offshore ones, and you kind of go back and forth there. So there's some outcomes that I wouldn't try to predict. I do think it's rational for these various entities to try to get into the stablecoin market, given how big and potentially profitable it can be. But it's hard to judge the outcome. So I think that given status quo, I think Tether's in a very strong position. A prime dealer now, for example, has been more supportive of Tether than the rivals onshore. And so, given an absent of very strong efforts to change that, I think the status quo likely continues. I think that domestically, obviously, some stablecoins could continue to gain market share, but globally, Tether is so far in the lead that it would take pretty heavy disruption for that to change. So my assumption is just current momentum continues.
Lynn Alden highlights that while Bitcoin's transaction volume is smaller than traditional systems, it matches them in transactions per second. She argues that Bitcoin, as an international and open source alternative, could eventually replace traditional settlement systems, which are inefficient with high volumes but few transactions. As Bitcoin becomes more widely distributed and less concentrated among a few holders, Alden predicts a decline in its volatility, an indicator of price stability. Alden also foresees the growing role of AI in the crypto industry, which she believes will enhance efficiency and productivity. Despite regulatory challenges being more pressing for larger cryptocurrencies, she is optimistic about positive legislative developments for Bitcoin, pointing to bipartisan support as a hopeful sign. With these factors in play, Alden's analysis suggests that Bitcoin's price could increase as adoption grows and regulatory clarity improves. Let's go back to the interview.
Well, one, I just like to compare the size of settlement volumes, because like you pointed out, it is a comically large number. America's GDP is measured in the tens of trillions, but actually gross settlement volumes are literally over a quadrillion. The reason I find that chart kind of remarkable is it's basically the same number of transactions that Bitcoin can do. Basically, it's somewhere around the same number of transactions per second on average. The difference being it's not 24/7 and it's permissioned. And so basically, Bitcoin is kind of like a Fedwire, but the global open source one so far are much smaller.
I see.
And that's kind of why I made that comparison, is that you can build things on top of it. Fedwire handles a comically large amount of processing with a fairly small number of transactions because it's the bottom of a layered stack. I think of a long time. I think we're 15 years in, and I think over the next 15 years that trend's going to continue of less volatility. Basically, it's in my view mainly around it being widely held. If something's not widely held, one big player can leverage and blow up and move the market, or buy in and move the market. Whereas when you get 5x or 10x more just broad distribution of the asset, you have more. There's historically been a cycle of distribution where during bull markets, kind of longer term whale holders will trim their holdings into that bull market and all that liquidity. And then during bear markets, generally kind of rotates back to the stronger hands. But every cycle, Bitcoin gets a little bit more distributed, kind of like a startup company becoming a publicly traded company over time, growing, its holder base gets more diversified. And when we hit a certain point, the volatility just, I think, will diminish over time, and the uncertainty around the asset will diminish over time.
Are you anticipating any movement in this space in terms, or do you feel like this space is starting to see the top of where it's going to go in terms of AI adoption?
Oh, I think it's going to go way higher than it is now. I think one of the biggest challenges is to determine who makes money from this. So obviously the GPU makers are making money, and the question is, how much money will be made on the other side of it. This could be one of those quiet revolutions where the biggest winners, other than the GPU makers, are basically just various companies or individuals that have productivity increases from this. And so this is a long-term productivity improvement, because kind of like how automation made blue collar labor way more efficient. Basically one worker can do the work of 3 or 5 or 10 workers.
Or do you feel like the Harris camp needs to come out and take a position?
So I think that it's currently a bigger issue for broader crypto than Bitcoin, because a lot of this hinges on what is the security, what are the rules around issuing securities, things like that. When it affects Bitcoin, it's largely either about mining or about privacy. Like, is privacy allowed? Or are they gonna put resources in cracking down on various privacy techniques or not? That affects both Bitcoin and broader crypto. I personally wouldn't have super high expectations for Harris regarding digital assets in general. I think hopefully they'll be more constructive than they have been recently. One of the things during the Bitcoin conference, obviously there were a lot of headlines around Trump speaking and stuff.
Yeah.
But there also were Democratic politicians there, including Ro Khanna, and a number of them co-signed a letter written to the DNC saying that our party, has to be better at that, right? So when you look at it from that perspective, that actually, the fact that they were there and kind of, getting interest there, I think was important, because if you kind of look at this as, two-party structure, if the majority of one party is happy with the industry and then a minority of the other party is happy with the industry, then it minimizes the risk of really draconian opposition against the industry. It still might not be a great place for the industry depending on who wins, but by having some of that bipartisan interest, you kind of potentially cut off some of the biggest tail risks that can be done against the industry.
Morgan Stanley has significantly reduced its exposure to Bitcoin, selling most of its shares in the Grayscale Bitcoin Trust and cutting its holdings in spot Bitcoin ETFs to about 189 million. JP Morgan's exposure is even smaller, with just 42,000 in Grayscale's Bitcoin Fund and 18,000 in the ProShares Bitcoin Strategy ETF. Despite this, institutional interest in Bitcoin continues to grow. While Bank of America, UBS, and HSBC hold smaller spot Bitcoin positions, hedge funds are increasingly aggressive. For example, Millennium Management holds over 1.1 billion in Bitcoin ETFs, including a $371 million stake in BlackRock's Bitcoin Fund. London-based Capella Investment Management has also invested over $464 million in spot Bitcoin ETFs. Hedge funds like Elliott Investment Management and Point72 Asset Management have entered the market as well. Bitcoin mining has become another lucrative avenue for investors. D1 Capital has invested heavily in Bitcoin mining companies, like Bitdeer Technologies and Iris Energy, with the aggregate market cap of major U.S.-listed Bitcoin miners reaching a record $22.8 billion in June. Considering these developments, is it likely that Bitcoin's price will surge? Like and subscribe to bring good luck and blessings for your financial future, and get this crypto bull run going.